So I'm joined by Martyn Wickens. Martyn's going to talk to you about business protection and why so many people really, Martyn, don't really consider it, that should consider it. And really there are four main types of business protection we're going to talk about today. And I suppose what we're saying to everybody that we represent is this potentially you? So talk to me about key person protection first of all, and let's let our clients think, could this be them?
Yeah, so essentially key person cover is quite important really. So it can be used to replace profits in a company if a key employee was to die or become critically ill. So it obviously happens quite often. And issues that surround it are that we may have to raise some money with the business to replace that key individual, or it may be the fact that the actual level of profits are going to reduce dramatically. And so it's a good form of insurance to have in place for that happening.
So, let's take something relatively mundane, and I don't mean to call a broken leg mundane, but let's say somebody goes skiing in the skiing season coming up. They're out of action for 4 or 5 months if they've got a physical job, but they're an absolutely key person in a small company. Can it cover you for that type of thing, and what else?
Yeah, so I mean, really, where it comes down to what the issue is. So generally, it would be critical illnesses that it would cover you for, or death. So they're the two main things that it would pay out on. There are other types of cover that we can put in place for temporary period of absences, such as group income protection or executive income protection. It all depends on the scenario.
And affordability, I mean, because obviously if you're talking about company profits for a key person, that could be a substantial amount of money, but the thing that would worry people would be that might sound quite pricey.
Yeah, exactly. I mean, I was looking at a study the other day actually, which was saying that when business owners were asked how much do you think cover is going to be for things like key person insurance, they tend to, with their answer, tend to come out around 3 times higher than the actual cost was. So it's not always as expensive as you might think it's going to be. So it's always good to get at least a quote.
And can it run on and on if somebody's ill for a long while? Or?
Yeah, exactly. So cover can pay out for as long as you want it to. We can set covers that would pay out till retirement age, or we can have it just for a set period of time.
Okay. Now, what about shareholder protection? That's one that really does fly under the radar, but actually, logically, by the nature of the way many businesses are formulated, it would be relevant to so many people. So what is the gist of shareholder protection?
Yeah, so essentially, the way to think about it is it's a way of business owners retaining control of the business. So should one of the other shareholders or a partner in partnership become critically ill or to pass away. So the scenario to think about is you have a couple of business owners and one of them was to pass away. Well, then you might find that the family of that other business owner might end up inheriting those shares. So it's always a good idea to have some cover in place where we can ensure that the funds are available to be able to buy back those shares and ensure that the control of the company remains where it was intended to be.
So just so I'm clear on this one, Martyn, let's just put a scenario in. Let's say you and I are 2 business partners, but for whatever reason, I don't get on very well with your spouse.
It happens a lot.
Something happens to you, they may not be amenable, or they may decide to keep hold of those shares and have a very very large say in the business without knowing much about the business, if you understand what I mean. What you're saying is you can have a pre-arranged agreement that means they are paid out in the event of your death, and I don't have any of those arguments to take care of.
Exactly, yeah. So what you can put in place is a certain kind of option agreement whereby if either party wants to go forward and either buy or sell the shares back, then the other party would have to agree to that. And where the insurance comes into place is just to ensure that if that option is taken up, then at least the funds are there readily available.
And again, the immediate question that comes into mind is price, and I suppose to a degree how long's a piece of string, but can you give us a
Yeah, exactly. It's very standard life insurance costing, or critical illness costing. You can also put in place critical illness for shareholder protection as well. It's not just always on death, because if someone was to suffer a critical illness, it might be that they may not ever be able to come back to the company. You're thinking of things of like dementia, Alzheimer's, things like that. So yeah, cost, again, it always tends to be cheaper than they actually expect it to be. So the only way to find out really is just to apply for a quote and just see how much it would be.
And I suppose the same thing goes with directors' loans, etc., more standard elements that people might well bump into more regularly.
Yeah, so I mean, most people tend to have some form of mortgage protection on the main residence mortgage. But what people tend to not think about is the loans that are taken out by businesses, whether that be a commercial loan, mortgage on the property. It's just as important to ensure that the company's got some protection in place. Should something happen to one of the business owners, then those loans are going to be potentially repayable. And if the funds aren't available, then you could be in some trouble there, really. So it's always a good idea to have a look at what loans there are, whether that be directors' loans, mortgages, and just look at what life insurance can be put in place.
Now, the one thing I'm hearing, I don't know about you, more than anything else at the moment, is it's impossible to get and keep good staff. So one of the ways of combating that is by enhancing the package that you can give to people, and a death in service package is obviously sometimes a very valuable asset to have, and quite a differentiator. You just walk us through how that might work, or indeed at a more prosaic level, maybe a group health scheme.
Yeah, so there's a few different plans available now, and they're becoming more and more popular. So you have your group death in service, which most people tend to have heard of. It's a bit old-fashioned now, that some of the larger companies used to always offer it, but now we're seeing companies of all sizes offering it as an extra benefit to attract the best staff, essentially. And what you tend to put in place is a multiple of salary. So it's ×2, ×3, ×4, whatever the employer wants. And again, these policies can be set for a set level of time, up to state pension age is a very often used one, or maybe to the age 70. But also there's group sick pay, so like a group income protection that we put in place for all members of staff. So it just ensures that if a member of staff is off work long term, then there is insurance there to start paying towards a salary for them until they're ready to come back to work. And then finally, there's also private medical insurance as well that's available, that businesses can pay for now and take out for the staff. With everything that's going on at the moment in the world, actually having the funds available to go private is becoming quite important now, actually. And so more and more people are looking into it. So it is an option that I think is worth discussing.